Well, after 2 days of declines, we saw US indices bounce back quite smartly in trade on Thursday. When I'm looking at how the Dow bounced back, it was up around 1/3 of a percent, the S&P 500 up 1.84%, and the Nasdaq up 2.69%. But to really understand the kind of move that US indices made and to underline the volatility really from the bottom when I'm looking at it, the Dow Jones bounced back 2.27% from the bottom, the S&P 500 2.5% from the bottom, and the Nasdaq nearly 3.5% from the bottom. So you're seeing larger shifts in terms of the whipsaw movement in markets even intraday. And when I'm looking at broadly how all these three indices are placed for the week, well, they're placed in the green for the week now after 2 days of declines. Just that one day of reversal has seen markets come straight into the green. When I'm looking at how the US employment data came through, that's the other factor which was in focus. 128,000 jobs added in the month of May. It's the lowest number of jobs since the start of the pandemic. That also underlines that there is a slight weakness which is starting to build in among the economy as well. When I'm looking at Europe, well, European markets rose as well. In fact, both the DAX as well as the Stock 600 was up over 1% in trade yesterday. Of course, the FTSE was closed on the back of a holiday. Moving quickly on to how Asian markets are looking, well, the large or the good tailwind with regard to US markets has left a good handover for Asia, and Asia is largely in the positive at the moment. The Nikkei is up over 1%, Shanghai up nearly 0.5%, the ASX up 0.75% or so, the Kospi is up around 0.4% as we speak, and the Hang Seng is the only index, major Asian index, which is currently lower in trade. It's down around 1% as we speak. When I'm looking at the SGX Nifty, that too is looking in the green. It's looking positive at the moment. Positive cues coming in for Indian indices as well. The SGX Nifty is up a smart 1+% in early trade as well. But moving quickly on to commodities, commodities were in focus as that OPEC meeting came through, and that meant that production goes up. However, it's not gone up in a meaningful manner which will impact prices, and oil prices have continued to stay above that $115 a barrel. Now this is a key to watch out for. So while they've increased production, they've not increased production as much or meaningfully for the months of July and August, and that will mean that oil price pressure will continue to remain. That is what markets are currently projecting. Moving quickly on to gold, the safe haven commodity has continued to bounce back very well, towards midweek as well as towards the Friday of this week. Thursday as well as Friday has seen a good bounce, and gold has come up to the $1,875 an ounce mark as we speak, largely on the back of that tepid US jobs data announcement that came through. Moving quickly on to currency, the dollar index continues to show weakness. Of course, a little bit of strength shown yesterday, but it's back below the 102 mark now. That's where the dollar index is currently placed. Bond yields continue to hold out. They are at the 2.92% mark despite the weak jobs data number, and cryptos have buoyed well. So cryptos have risen up. In fact, Bitcoin is above that $30,000 mark. Of course, the jobs data again playing its role in having riskier assets move up slightly quicker on the back of that weak jobs data, especially cryptos, which is the hedge, as well as gold. When we're looking at largely how the Fed is looking at rate hikes, they're continuing to give commentary on 50 bp rate hikes going forward, and they're saying that till inflation doesn't come down meaningfully, that will continue to be the case. That's what most presidents of most districts of the Federal Reserve have been saying. So that will keep markets under pressure, but despite that, markets currently are looking in the green today.